What's going on, everyone? Jeff back with another video. Uber stock is currently trading at $30 a share. Now, back in February, before all the pandemic and all the crisis really started taking swing here in the United States, Uber was trading well over $41 a share, and it's seen this huge decline. It's one of those stocks that just has not quite recovered yet, and a lot of it too is still probably Uber being in its infancy, has not been trading on an exchange for very long periods of time. If you want to back up to when they IPO'd last year, 2019, at the end of April, actually hit the market around $42 a share and then kept itself propped up between $40 and $45 a share for several months. And really now, since that time, has lost over $15 of share value. And most of the institutions that are committed to this company are buying in. A lot of the underwriters who have had the right to sell have exited Uber. And you are starting to see, and you're going to see even more of institutional buy-ins start pouring in for this company. Uber got some pretty decently big news today. And so what I want to talk about in this video is Uber stock a buy at $30 a share. If you go right down here to the aftermarket quote, right now, Uber is trading at exactly $30. So how appropriate of a video title. We're going to go over some of the latest events, talk about their last earnings report. I even want to do kind of a detailed breakdown of, if you are going to invest in Uber stock, just what exactly you are getting yourself involved with. So before we get started, do me a favor, drop a thumbs up on this video. I appreciate all the support, and make sure to subscribe to the channel if you have not done so already. So this news broke maybe just 15 or 20 minutes before I actually started working on this video, that Uber's $25 a month subscription service is now available across the United States, excluding California, and that's discounted rides and food delivery for a monthly fee. Now, Uber Pass, that is the name of the subscription service, was actually introduced in 2018, is now available nationwide. So the expansion of Pass, and they're comparing this to Amazon Prime style subscription service that allows Uber customers to pay a monthly fee for discounted rates for Uber rides, Uber Eat deliveries, and scooter and bike trips. Comes at a time when the company is struggling to maintain its financial footing during the coronavirus pandemic and fighting a dramatic legal battle in its home state. You do have those two things really pulling on Uber right now. Definitely the coronavirus pandemic. We're going to get into that more when we cover earnings. I have a couple slides I want to show you as well. Then, of course, back in 2018, during its test phase, Pass was only available in just 10 U.S. cities. Now that it has expanded to over 200 cities, including New Haven, Columbus, Honolulu, Madison, Milwaukee, Nashville, New York, Portland, Seattle, and St. Louis. And this is how it's going to work. For $24.99 a month, riders will get 10% off Uber X, Uber XL, and Uber Comfort rides, 15% off Uber Black, Uber SUV, and Uber Premier rides. Pass fares won't be subject to typical and external events like weather, traffic, or surge pricing. There's no limit on the number of rides a customer can take each month. Subscribers will also get 5% off their Uber Eats deliveries over $15 and free delivery. So if you use the Uber services a lot, every day, multiple times a day, this is probably something that could save you a little money. Uber drivers will still get the same earnings based on time and distance, with Uber covering the difference. That means, yet again, Uber is ramping up a new product that will most likely fail to recoup its own costs. However, I think you're probably going to see some of that in the first couple of months, maybe year or two that this is launched, and over time they will monetize it properly. And I do think another good long-term catalyst to be invested in Uber, that they are definitely willing to experiment and try things. Now, people that live in California are not eligible for Ride Pass, and that is due to the company's ongoing fight over the status of its drivers. And the company went on to say it would shut down its operations in the state completely on August 20th rather than comply with a court ruling to classify its drivers as employees. So there is some strings attached. There is some legislation in place there that Uber is going to be out of California on August 20th. That again can be something that could probably affect the stock price directly, being that California is such a big state. Now let's talk about earnings. Uber had earnings last week and the shares did trade down a little bit. Let's go over here to the chart. Right here on the 5th of August, Uber actually traded up in anticipation of earnings, was up around $35 a share. Then they reported earnings, and the stock has been pretty much all downhill since. Took another big slide down to around $32, and now, as you can see, since that time has traded itself back to an even 30, and the stock did trade under $30 for a while today, getting down to $29.50. I think this is a very buyable level for Uber. And could it go lower? Yes, absolutely. The stock could go lower in the interim. But if you are a new investor, or if you are interested in some of these IPO level companies that are still new to the market, you are getting roughly a 50% discount from when it IPO'd now. And like I mentioned at the start of the video, all of the time restraints that go into it IPO. For example, underwriters having the ability to sell. These underwriters have to hold so much stock for 90 days. In 6 months, sometimes they're contracted to hold the stock for over a year. All of that is kind of over and behind us now. So you're probably not going to see as much rapid fluctuation in the stock price as you did maybe 6 months ago. But the shares did fall 2.8% after Q2 report that beat top line estimates but missed on earnings and gross bookings. Overall revenue declined 29% year over year, with a 67% decline in mobility, but a 103% growth for delivery. That's formerly Eats, as the respective pandemic headwind and tailwind continued. Now I've got a couple of graphics we can take a look at. In 2019, their gross bookings were $65 billion. And that was 35% year over year growth. But Q2 of 2020, as you can see here, is $10 billion gross bookings. That was actually a negative 35% year over year decline. So they did take a pretty sharp decrease in gross bookings. And then right down here, trips was at a negative 56% year over year decline. I guess one could probably theorize that maybe Lyft is growing and starting to cut into some of their market space, but that also was not the case because Lyft also had poor earnings. You know, they did see some declines as well. So these companies are kind of what you would call sister companies, or they sympathetically trade up and trade down. They're going to have very similar earnings. Now for the delivery side though, Q2 was fantastic, $7 billion of gross bookings and a 101% year over year growth on trips. Now the reason gross bookings saw this sharp reduction, obviously it was driven by COVID-19, and it is starting to recover steadily through Q2. This chart runs to about the end of June, and there is some similarities in between the stock chart and the revenue chart we were just looking at a moment ago, where it took this huge sharp decline right here in March and now is starting to see gradual improvement again. And so what do the fundamentals look like with Uber? Guys, Uber is not a profitable company. They have a negative 50% profit margin, negative 34% operating margin, with a return on assets and return on equity both being very, very negative. So this company has a long ways to go before they will be a profitable company, but they're still also very, very big, and this is a growing industry. That's why the time to invest is when risk would be the highest. And their balance sheet is not terrible. It's not necessarily good, but it's not bad, with $7.79 billion of total cash and $9.59 billion of total debt. That is actually a very decent number. So there's really no threat to Uber going bankrupt, or if the economy and the stock market continue to suffer, if they were to continue to suffer, you know, Uber is going to be just fine. And their cash flow, okay, so they have negative $4.21 billion operating cash flow, negative $1.87 billion of levered free cash flow. I think this is the part of the video where I'm going to kind of make my recommendation on Uber. $30 is probably a great place to start an investment in Uber, but in all honesty, the stock will probably trade much lower, and I could see it around $20, maybe $25 a share before it hits a bottom and starts seeing a strong reversal back to 40. And there's also a big impouring of hedge funds owning Uber, okay? So in Q4 2019, there was 105 hedge funds that owned Uber stock, and there was 60 new positions added in Q4 2019. So this is definitely a stock people want to own. And so if Uber stock is a little bit too risky, And like I said, we all are aware the fundamentals are not good. They're definitely not profitable, and they have a long way to go before they will be. I always like to think of alternatives. So what is a way that you could have some exposure to Uber stock? Well, briefly mention this Renaissance IPO ETF. Okay, the ticker symbol is IPO. And I'll quickly read you the description, and then we'll go look at some of the holdings. IPO offers access to the newest publicly traded stocks in an ETF wrapper. It adds a new company to its basket within 90 days of listing and removes a firm after 2 years of public trading. So I think this is a very compelling and interesting ETF. Like I said, if you definitely want the exposure, you want to have some level of weight in your portfolio in Uber stock, but not necessarily take a large position or own much of it. Let's take a look at some of the positions that this ETF holds. And as you can see, it has some fantastic companies like Zoom Video, Uber, Moderna, Pinterest, Datadog, CrowdStrike, Neo, Slack. So you're getting access to a lot of newer companies that are newly IPO'd. And then after 2 years, it moves out of a position and rotates back into a different stock, a different IPO level stock. The performance on this ETF has actually been very good. It's been trading on the market for about 5 years now. And this year alone in 2020 is up close to 100%, going back to the spike down in the coronavirus pandemic. So now it's currently trading around $40 a share. So that's just an option. Like I said, I always like to offer and think about alternatives. Some of these stocks are very risky, and I think Uber is very risky. But even with that said, I'm willing to own Uber, and I think here around the $30 share mark, it is very buyable. Just don't be surprised if we see $20 to $25 a share again, because they definitely need to take steps towards profitability before they're going to get huge institutional buy-ins. So that's all I got for the video, guys. Make sure to go down to the comments, tell me your thoughts and opinions on Uber. I always enjoy hearing that. Thank you as always for watching the video, and have a great day.